I joined the trustees of the two Baptist Union pension schemes back at the beginning of 2009, and since then, and through the pension review process, we've identified a number of important pension issues affecting churches. Unfortunately, most of them are bad news, and I'm sorry to have to share them with you, but it's very important that local church leadership understands the implications of these for their own churches. The first thing which you need to know is that churches are deemed to be employers as far as pension law is concerned. That may come as a surprise to you because we're all familiar with the idea that ministers are office holders, not employees, although they do have this strange status where they're treated as employees for tax and national insurance purposes. However, the pension trustees and the Baptist Union have taken expert legal advice, including going to a leading counsel who specialises in pensions issues, and that has confirmed that for the purposes of UK pensions law and regulations, churches have to be regarded as employers. In case there was any doubt over this issue, a recent case which took place in the summer of 2010 relating to marine pilots included a specific statement by the judge that the person or body or organisation responsible for paying an office holder was deemed to be their employer for pension purposes. And this applies in the Baptist Ministers' Pension Fund to any church which has been responsible at any time since the 1st of September 2005 for paying a minister while that minister was a contributing member of the fund. What this means is that any church which falls within that definition is obliged to pay deficiency contributions. And that's true even if the church does not have a current minister, or if the church's current minister is not a contributing member of the Baptist Ministers' Pension Fund. Depending upon the final outcome of the actuarial valuation of the Baptist Ministers' Pension Fund at the end of 2010, we are expecting that the deficiency or shortfall contributions required from churches will be somewhere between 10 and 12% of ministers' pensionable income. And that amount is potentially payable for 20 years. But I also have to tell you that when the actuarial valuations take place every 3 years, that figure will be reviewed and it could well change. We would all like to see it go down, but there is a possibility it might have to go up, or the period for which it's payable may have to be extended. Now, as a church, your reaction may well be, well, I would like to opt out of this, thank you very much, and we understand that. However, if you opt out, you have to pay what is called an employer debt, and that is a very serious matter not to be entered into lightly. For some churches, the employer debt may be the best way forward, and we'll be putting in place mechanisms, we hope, which will allow us to help churches to identify whether that is something they would want to pursue. Let me explain to you how these employer debts arise. An employer debt arises when there is what we call a cessation event. These cessation events arise under government regulations which are designed to cope with a commercial environment where perhaps a company might sell one of its subsidiaries, which will have nothing further to do with the pension scheme in the future. And the intention of the regulations is to make sure that that subsidiary doesn't go away without making sure that its share of the pension liabilities are properly covered. But of course, in our Baptist environment, where we have over 1,000 separate churches participating in the fund, and most of those churches have just one member in the fund at the moment, the minister, A cessation event arises as part of normal denominational life. Each time a church goes into a pastoral vacancy, there is often a cessation event. Even if the church continues to pay contributions, as many of them have done, that does not prevent the cessation event taking place. I should also mention that this does not just occur when a minister leaves, but changes in the legal position of a church as a result of either incorporation or amalgamation also gives rise to cessation events, and anybody thinking of going down either of those routes needs to take very careful legal advice on this point. If a cessation event takes place, it's necessary for a valuation of the fund to be made at the date when that employer or church ceases to participate in the fund. As a result of that valuation, an employer debt is calculated, and it's calculated as the share of the shortfall attributable to service by members with that church. It's calculated on a pro rata basis according to the liabilities that have arisen in respect of ministers during their service with that particular church. So, for example, a church which has only recently started to have a minister in the fund would have quite a small employer debt, one where there is a long history of ministry, and many of those ministers may be still alive as pensioners of the fund, or possibly their widows or widowers are alive as dependent pensioners of the fund. All of that has to be factored into the calculations. And the really bad news is that under the government's regulations, the shortfall that we're looking at, and of which churches have to pay their share, is not just the £60 million, alarming enough though that be. It is what is called the buyout deficit. And that's the gap between the amount of money that's currently in the fund and the amount that would be necessary, or is estimated to be necessary, to buy annuities for all the benefits in the fund from an insurance company. This is a very stringent measure for the shortfall, because insurance companies sell annuities on terms which try to make sure that they don't run out of money before they run out of people. And in the case of the Baptist Ministers Fund, the estimated buyout debt at the end of 2010 was almost £100 million, or an average of over £80,000 per church. However, as I've indicated, the amount due from any particular church varies enormously according to its particular circumstances, and we have recently done some illustrative sums which suggest that employer debts might range at the bottom end from about £20,000 and could, for a church with a long history of ministry, be as much as £250,000. Now, this is clearly a very distressing and alarming prospect. Most churches are not in a position to pay those sorts of figures as lump sums. Unfortunately, the fact that the employer debt regulations apply to the fund, and as a result cessation events were taking place, was not realised for some while after the 1st of September 2005, when the regulations were changed and brought this into effect. As a result, over 400 cessation events have taken place since then, but thus far the pension trustees have not levied any employer debts. The pension trustees' primary concern has to be to protect the security of the benefits that members have already built up. And at the moment, as the fund trustees, we do not believe that seeking to obtain very large lump sums from churches is in the interests of members as a whole, because of the damage that it will do to the Baptist community. We recognise that churches generally do not have large amounts of money sitting around, but they do have income year by year, and it's much better to meet these obligations through the payment of deficiency or shortfall contributions over the long term, rather than trying to hit churches with a large lump sum bill. Over the past year to 18 months, the trustee of the Ministers' Fund has taken legal advice and consulted with the Department of Work and Pensions, with the Pensions Regulator and with the Pension Protection Fund. And we have seen answers to prayer in the way that each of those has responded. And that brings us as a result to the trustee's current policy, which is set out on page 14 of the Pension Bulletin for Churches. However, I do need to tell you that that policy may change at any time, because as trustees we are not allowed to restrict the way that we in future or our successors may exercise our discretion. But what we want to encourage churches where cessation events have taken place to do is to carry on paying deficiency contributions, and also to cooperate with us as we try to establish a record of which ministers have been in service at which church over which periods. Up to now, the record keeping within the Baptist Ministers' Pension Fund has been very largely geared to individual members rather than to churches. That is now changing, but we need to try and go back and recreate the record of which ministers worked when in which churches, and we do need your help in doing that. So if you have had a cessation event, or you think you may have done, then you may expect that the pension trustee or the pensions office on their behalf will be in touch with you in due course. However, it may be that you have a minister who is going to be leaving shortly, and it's very important that you take the appropriate action if that is the case. If your minister is leaving and you do not have another employee, for example a second minister who's in the fund, then you need to act promptly. You should request from either your regional minister or the pensions office at Baptist House the wording of a standard letter which requests a 12-month period of grace. The important thing is that this letter is sent to the pensions office within the first month after your minister departs. If you've done that, that then buys you 12 months of time, and we're hoping, if the Department of Work and Pensions do what we have suggested to them, that that 12 months may be extended to 24 or even 36. But within that period of grace, that you either appoint a new minister who is a contributing member of the fund, or you appoint a paid interim minister member of the fund. This is a new category of membership that was introduced by a change in the fund rules in November 2010, specifically to cope with this situation. The interim minister may be a moderator or maybe somebody else. They need to be a member of the fund already. They need to be paid at least £500 a year on a regular PAYE basis, and pension contributions of £120 a year need to be paid in respect of them. More details about these arrangements are available from the Pensions Office. If it affects your situation, please contact them.